All right. What's going on, everybody? Now, before y'all say anything, I know what's going on with my camera right here. I'm not too happy about it. I'm going to be in the process of, replacing this capture card. So just side note, I thought I'd still put on the camera for this episode so that, you guys can see me and it's not just a boring video where there's no camera footage and it's all just straight screen sharing. But give me some feedback in the comment section and let me know, if you guys prefer the camera being on with all this noise happening on the screen, or if you just prefer the screen share. Maybe it's too distracting, but I will be in the process of getting a new capture card so that this doesn't happen in the meantime. But with that out of the way, welcome back, everybody. It's another episode of MCubed with Adam as the crypto market overview guy. Yes. All right. So let's go in here. Let's minimize this and really talk about what's been going on with the markets recently. Let's actually double back into Bitcoin right here, maximize this chart, and we can see that Bitcoin's still consolidating quite a little bit in this area. What I would really want to bring up is, the fact that we talked about El Salvador and the dip that happened against the good news last episode, and how the market's kind of just trying to find its footing real quick. We can see it's still respected this level, but as I would say, we're experiencing a little bit of uncertainty and doubt in this area. Price hasn't made any sort of decisive recovery or move to the upside in the meantime. I think what is a safe thing to say is that, give it some time, give it some breathing room. I would consider, anything lower would be, a good chance to grab some Bitcoin while it's cheap. I still think this is healthy price movement. What I've said in the past is, be aware of your emotions. What are 99% of people feeling in this area? A lot of people are just kind of I don't know what's gonna happen. If it goes any lower, I might take out my profits or take out my holdings and, sell at a loss. But, as I always say, or I hope I always say this, if not, then, I hope you guys take this advice in the future. It's to zoom out and really see, what's been happening on a larger time scale. We are retracing after just straight bullishness for how long was this? A good 48 days. That's the majority of a month and a half, pretty much, almost a month and a half right there. So, after we're seeing, a good run up to where it's 80% of the price, it's only natural to see the markets rebalance itself and take back only 20% of the price. Currently, on a pretty healthy track here, if I'm not gonna lie. And what we can see here is, let's go ahead and pull out the good old handy Fibonacci. We're gonna go off of the lowest closing candle here, and we can see right off of where is it? Right here. I'm gonna put it there because I'm used to that box being there. But right after this retracement zone, we're seeing the first area where sellers typically show up off of a movement. So, this is characteristics of a trending market. Whenever it dips into a 50% to 61.8% zone and continues reversing or continuing towards a certain direction, whether that's to the upside or to the downside. But I would just say give it some more time. I really think that anything within this area is perfectly normal. We are seeing not only that, but let's see, let's go with a regular old box. This is a huge area of just unfilled price action that was never visited again. And like we say before, you know, the market always likes to rebalance itself. So it wouldn't be too far-fetched if we see something go into this area. Now, with that being said, let's go ahead and fib the bigger movement out off of this zoom out. We're seeing a good area right here where a lot of levels have been marked out and established before within this 78.6 to 88.6 percentage retracement zone. So if price were to continue lower, this is something I may be looking towards, you know, putting some buy orders in. You know, I wouldn't necessarily be trading within all this noise. I would look for a definitive shakeout because this was a prime entry and wasn't revisited. And that was within the 50% 618 zone, which it is currently outside of right now. You know, right here, 78.6 to 88.6 is typically the last line of defense per se. I wouldn't want to see it typically like break lower. I tripped up on my words there, but I wouldn't want to see this really go any farther down than this, just because, you know, this is a solid area to retrace to. This would be an area of demand, kind of a last defense, like I said, for the buyers. It's sort of like one of those last opportunities for them to step in. It's off of the previous higher high. That higher low was put in, so we don't want to go below this level right here. If we go below this level, that is where the market would shift towards a bearish tone. Okay, I'm going to mark that black just to make it neutral. But if candles were to close lower than here on a 4-hour time frame, that is the defining, that is the defining event that I would classify the market shifting towards a bearish momentum, and we can start looking for moves towards the downside. If you know, any of you guys are traders out there, once this crosses over here, if it does, I would look towards, you know, going on to MetaTrader 4 and start looking for shorts to, you know, profit off of the downside of the market. Now, it's not highly probable. I would say this is not necessarily a very plausible case, because on the larger time frame, we're seeing a much more bullish circumstance right here. You know, it's quite literally just a common retrace. We haven't really established a new higher high from this point just quite yet, but also we haven't broken this low at all whatsoever. Now, I don't expect it to break this low. If it were, that would be just straight up the end of the bull run. Like I said in previous episodes, you know, this is the 1.618 level that we have established support on from the previous bull run's extension point, right? So very important level. It's extremely vital that that gets held. I'm not sure why that circle is there. It's starting to look a little bit noisy on my chart, but that is pretty much like what I'm looking for. This kind of makes a lot of sense to me. Now, the last line of defense also for sellers, the last point that we would see them come in on this on the lower time frame scale would be this 78.6 to 88.6% zone right here. So be wary of that. It's very possible that this price can still turn around, maybe flip this level, and then come up here for a move towards the downside. You know, could consolidate a little bit before reaching down here and then starting to continue towards the upside. Now, that's a very stretched out time frame. I personally don't think that price is going to take this long to make this sort of movement. I'm not sure if I can shrink this. I can't really shrink it, but I would think that we would see some sort of definitive like final shakeout where it breaks this low, goes a little bit lower, but not necessarily going past this point right here. And this is a tool that I've recently discovered is, let's go ahead and adjust this right here. We're just gonna take these out of there for now. But I would look towards any of these time frames, right? So right now we're looking at either September 20th, we're looking at, you know, the 27th, or closer towards the 7th or 8th of October. Now we can get a little bit more specific here. Let's go like that. And yeah, pretty much similar time cases. This is something that, you know, Fibonacci is really a, how do I say? It's been involved in a lot of areas of not only the markets but life, but since the markets are literally charted out right in front of you, it's much more measurable since what we're dealing with here is numbers. Now, I'm not gonna get too in depth with that. That might be something for a conversation whenever you talk to me in person, because I can go on to that for hours. But right now, you know, within this zone right here, let's go ahead and bring back the rectangle. This zone right here is not going to give me any sort of definitive price action that I can really make a solid conclusion out of. So don't get affected by anything here. You know, we've seen stuff where it just hung out in a zone before and people just thought Bitcoin was dead, even though it didn't really make any significant movements. Once it created a low at a significant zone, that's when we saw the strength come back. So it's just a matter of waiting and really just twiddling our thumbs in the meantime. I mean, there's no better way to put it. The market likes to reward patient people. So be one of those people, be patient, be diligent, be aware of your emotions. Ask some friends how they're feeling about the market. If they don't know what's going on with the market, there's a good chance that, you know, maybe you should do the opposite of what they're doing. Sure, they could be a smart person, but just take everything into account with a grain of salt. Don't use mass media and the news as your main source of information. Now, what I want to go into is also another factor, which is the dollar currency index. This is really just an index defining the strength of the US dollar. And as we can see right here, this is a significant zone where we're seeing a supply zone right here getting pushed. So it's had some significant price action towards the upside. It hasn't really like pushed beyond these zones just yet. We're seeing some selling pressure starting to come in, but right now, you know, fundamentally, I see, you know, an infrastructure bill being passed. I'm seeing, you know, a lot of money that's about to be printed in the very near future. And at the same time, I'm gonna double back into Bitcoin and kind of mention to y'all the fact that, you know, Joe Biden's administration just passed like a bill where the IRS is going to start monitoring any bank account above $600. And they also put in a subsection within that how they were going to monitor cryptocurrency assets on top of that. So that might be another factor where we're not seeing any decisive buying action just yet. So, you know, be wary of that. Know that there are some factors at play whenever it comes to, you know, government, financial policies. But on the bright side, we did see Ukraine also, you know, start legalizing Bitcoin as a legal tender. So we might see that real soon where like Ukraine starts buying up Bitcoin as well. You know, other countries start stepping in. When countries start buying a whole currency for their country, we can see a lot of momentum towards the upside. I really don't see Bitcoin logically going down right now, especially with a lot of institutional and smart money investors stepping into this space this year. You know, it doesn't make sense, especially when they have great minds at hand stepping into, you know, what their financial decisions are looking like. These people are in charge of billions of dollars, and it's not like they're going to make irrational and non-profitable decisions. They're looking for the long term. They're looking for, you know, an appreciation of value. And if they see that in Bitcoin and other cryptocurrencies, I don't see why Bitcoin's bull run would just abruptly come to a stop this month, next month, or, you know, 2 months down the line. It eventually is bound to end in the near future, as we're, you know, getting into the second out of the 3 waves of this bull run. But just know, you know, these shakeouts are bound to happen. The bull run's going to be fun, but it's not going to be easy. And it's just a matter of making it easier by being more aware of your emotions and not letting them become the best of you. So let's go ahead and check out ETH. A lot of the same things are happening here. Let's go ahead and throw a fib on it. That should be my new mantra, you know, throw a fib on it. Let's go ahead and mark this out. And lo and behold, we're seeing the same exact thing reversing around a 50% to 61.8% level. Now, we're also going to have to be mindful of this zone whenever it breaks to the upside later down the line, and see if it just, you know, comes, bounces off, if it go ahead and flips this level as a support. But we're going to get to that story whenever it happens, really. So it's just a matter of waiting, guys, seeing what the chart plays out to us. You know, let it speak to you, not physically, all right? We're not schizophrenic over here, but, you know, just let it tell you what it's doing. It's telling a story to the people who know how to read the markets, and it's not time friendly. Like, it does what it wants whenever it wants. It can make massive percentage moves in the blink of an eye, whether that's to the upside or the downside. You know, like, for example, you know, these candles that literally go up, you know, 12% over the course of 8 hours. Or let's shoot. How about this percentage right here? From here to here, we see 32% in 20 hours. Now, you know, it's just the most volatile market out there. Like, there's just no other way to put it. But cryptocurrency is literally the most volatile, most profitable asset class out there. And, you know, I feel like this goes without saying, but, you know, I've shown you guys this before, but be mindful of the emotional market cycle. I forgot to put emotional there. Look at that. It even says crypto for a suggestion. Be mindful of this, guys. It's a very real thing, and it's definitely a bitch to get caught up in this. You know, don't get played. That's all I gotta say. So what I've been doing in the meantime is really just getting into liquidity farming. I've been really getting into some more and more progressive, like, DeFi plays, utilizing that side of the crypto space. It's a very useful space to really, like, go ahead and make dividends on your holdings, on the coins that you're already holding, and just sit in your wallet, putting them to use, and, you know, increasing the value of your portfolio. So definitely look into it. I might make a DeFi episode here in the next few episodes over here. Possibly this next episode, if we're still hanging around the same areas, just to kind of bring something new to the table and we're not looking at the same chart, not going to any new areas. But with all that being said, that noisy camera looks kind of ugly. But with all that being said, I appreciate everybody hopping on the session today. And without further ado, I'm gonna call it a day here. Let me know in the chat box or the comment section. It's not really a chat box if it's not live, but let me know in the comment section, you know, what's your favorite coin? When did you get in it? But yeah, let me know in the comment section, what is your favorite coin? But without further ado, I'll see y'all next time. Peace out, guys.